Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. Ready for a long weekend. So markets are closed on Monday. I never know what to do with myself, but of course, I'm sure there's going to be plenty to do. We are excitingly uh, onboarding in this 1 month immersion into the Sector Secrets Mastery. We are onboarding at this point, I think, hundreds of new members. So I'm sure we'll have plenty to do in terms of getting everybody up to speed in terms of what we're doing in this market, day trading, swing trading, longer term positions. It's actually been a really good year. I can't really hate on 2024 at all. It's been very good. And why is it behaving the way it's behaving? Because while it may not be in March, and it frankly may not be in May either, we are going to get rate cuts from the Federal Reserve. And that's the important thing, gang. The rate cuts in the Federal Reserve are the reason that we're anticipating lower yields in bonds. We're anticipating lower lending costs. We're anticipating lower mortgage costs. And then all the dominoes that fall when money is, well, cheaper, right? Equities love that. And not only is it that equities love that, it's also because if you think about it, it gives us, you and me, less choice to route our dollars for a return. In other words, if dividend yielding stocks and bond yields are at a certain threshold, there's a choice, right? We can look at it, kind of look at the scales and say, well, maybe it makes sense to go into a dividend yielding stock or a more defensive corner of the market, when yields are as high as they are. But when they're not, right? Think of it this way, just sort of shuttled everybody into stocks when they're seeking return. So there's so many reasons why we want to stay bullish. Oh my gosh, bullish in this environment. And by the way, this is not a new theme. This has been alive and well since April of last year. It just continues into the new year because now, rather than rate hikes, which, by the way, equity markets, especially the S&P and NAS specifically, right, rallied into a year of some of the most aggressive rate hikes we've ever seen, right? So if anyone tells you we can't rally with higher rates, 2023 proved that wrong, right? We can't rally with a stronger dollar. 2023 proved that wrong. We can't rally with higher yields. Not true, right? So please, please, please look at the data. Don't follow the dogma, right? Data over dogma. Trade this, not that. All right. So as always, Debbie says, enjoyed your webinar last night. Yeah. Oh gosh. Thank you, Debbie, for reminding me. Gang, I don't do this all the time. And I'll be quite frank. The reason we don't have trials all year long is because it takes a lot of focus from you and from us to get started with something new tools, new charting indicators, a new process. And we make sure that during this month, we think specifically about that. Me, the Lorna bot, the Trish boss, we gear up this month for really our existing members, because a lot of them say, gosh, Rog, the reminder and the refresher is always so helpful. And then new folks, I never want you to feel on day one, oh gosh, now what, right? We think about this day by day by day during this trial. We do this once a year. So I don't want anyone thinking, well, I'll do it next month. It won't be available. Okay. So I'm really trying to make sure if you've been wanting to kick the tires on the Sector Secrets Mastery, it starts now. Okay. And there's a link that was in the webinar last night. There is the webinar replay you can watch. But if you head on over to Sector Secrets, the link that I have up there, it will take you right to that $7 trial. Okay, $7. All right, let's get to it. As always. And yeah, by the way, gang, let me put it this way. Let's say, Rog, I'm not sure if I've got time for the trial. No problem. You get a learning center. You get a at your own pace risk management and position sizing workshop. So some of those things are at your own pace and by themselves are worth the time. And then the one thing a lot of folks have been asking about is, Rod, can I have a larger curation, a better sample of the different hourly price movement ranges and daily price movement ranges? We do not do daily price movement range samples or anything like that. This is the first time we're ever doing that. It will not be ongoing. I can tell you that for sure. Okay. All right. So let's get to it. As always, thank you, thank you, thank you for all the feedback on the webinar. I love showing you all the trades viz, and that's something we're going to do a lot this year. What are the big two words for 2024? Account growth. It's every year, right? We're not talking about home runs. We're not talking about that one trade that we took that one day. We're not talking about one day of sessions. We're talking about when I go from the first of the month to the 30th, can I show you account growth? Everything else is garbage, right? You and I know account growth is what we're after, right? We're not after a good day. That's just one day, right? We want to string those days together as best we can. All right. So even after a hot PPI, Bitcoin and QQQ are still green pre-market. SPY, DIA are red. Okay. We'll just see how the day shapes up. Remember that there was a big sell-off already on CPI. And I think a lot of traders are now finally accepting that CPI reaction was really very much out of sorts, right? Now we're not significantly higher than what we saw yesterday into the close. As you can, if you take a look at where we were on 230, 240, where we are right now, yeah, it's fine. I think there was probably too much of a reaction. So you're asking why the disconnect? I don't know if it's a disconnect as much. PPI is not as important as CPI, but to your point, Line Watcher, yeah. I wouldn't call it a disconnect as much as maybe traders are realizing we might have overdone it with that CPI reaction. That was way too much of a tantrum. All right. A asks, can I talk about how I plan an exit? If you could be more specific, that'd be fine. Exits, well, how I plan it is when we're building out the trade entry, we have to know the trade exit, whether that's a target or whether that's a stop loss, right? And how is going to be volume, volatility, time, support, resistance. So if you have a specific question, let me know. That's a pretty big one. So let me know what you want to know. And please remember, it's a 20-minute show, not a 20-minute workshop, and I'm happy to dive into it. All right. Let's see what else you've got going on. Will Charts and Coffee be on Monday morning? Yeah, Ren, I'll not only be doing Charts and Coffee Monday morning, I'll be doing the top tier outlook on Sunday. Just because we have a day off doesn't mean that I won't be doing anything. It simply means in my head, just one day I get an edge on everything and everybody else. So yeah, I'll absolutely be at it. Thanks for asking, Ren. I do appreciate it. Let's see. So someone's mentioned that link isn't working. I don't know. I just did it this morning. So let's see. www sector. And there's a link, by the way, gang, in the chat as well. So you can click on that. If you go to sectorsecrets.com. And it should be popping up. Give it a moment. I don't know why. Yeah, there it is. Yep, it's fine. Just type in www.sectorsecrets.com. All right. Next up is, what's the significance of the distance between the bands on the hourly price movement range? Volatility, purely volatility. Not only volatility for the range for that given hour BMRM, but think of also the other ranges, the red and the green itself, right? The zone itself tells you a lot about volatility, and the distance between them tells you about volatility. It's all about volatility, period. Yes, thank you for the question. Good stuff. And think of it this way. When you are looking at volatility, it is going to change hour to hour on an hourly price movement range. It is going to change day to day on a daily price movement range. And these are the things that we need to keep in mind. Volatility is not static. It's not about what happened within a cumulative period of 7 periods or 14 periods or 21. That's simply not a relevant enough, large enough look back. It's not enough historical volatility. So when you're thinking about, well, how do I know how much volatility we could have? A lot of times the lead up into an event actually skews it, because a lot of folks go into wait and see mode. They sit back And then that skews volatility because it makes it look far narrower, far quieter than it's really going to be once the data hits. So when you look at historical volatility doesn't say, hey, what was happening 7 to 7:30 or 7 to 8:30 a.m. What was happening in those 90 minutes before the economic event? Because that might have been very quiet. 8:30 comes along, non-farm payroll, CPI, PCE, GDP, and boom, you get the explosion. Rather ask yourself, what tends to happen between 8 and 9 a.m. every morning? And so it's a very different view in that regard. And that's all going to affect those price movement ranges. All right. Let's see what else. Let's head on back over here. And so the link is working, gang. And let's see. Got the significant HPMR. What else do we have here? Bear with me. Yeah, it's working, PJ. Great. Any thoughts on PEP? Any thoughts on PEP? So Pepsi is a part of, well, so let's go up the food chain. We did a lot of this in the webinar last night. Let's go up the food chain on Pepsi. Where is Pepsi weighted, right? And let me see what's going on with my charts here. There's something not right. I've got these stuck somewhere. No good. Daily time frame. Let's go back 3 years. Yeah, my charts look very odd. There we go. So if I'm looking at Pepsi here, the overall issue that I have with Pepsi when I look at it right now is where it sits, right? In terms of the 1 year, in fact, let's look at another view of Pepsi. I'm going to show you another view of Pepsi. And so when I think about Pepsi, when anyone here thinks about Pepsi, I think most of us are thinking about things like XLP, right? So let me take you on over to XLP. This is the consumer staples, which, by the way, has been a really hot sector. It's a top 5 sector right now. So when you take a look at consumer staples and the top 11 names weighted within it, Procter & Gamble, Costco, Coke, Pepsi, Walmart, there's not that many individual names that are still as bullish as Walmart, Target, Costco, and XLP itself, right? So I'm always going to ask myself when I'm looking at individual stocks, 2 main things. Is it a green trend or not? Do I have a good green structured trend? The other part of it I'm going to ask is, of all the things that I could trade, is Pepsi above the equator? Now, we talked about the equator a lot in yesterday's webinar, which you can still check out. It's at the Simpler Trading YouTube channel, by the way. So when I look at Pepsi, it's below the 200. So if I were going to try to compare, I might look at Coke, right? If I'm looking for something above the 200, kind of in that same window of, sugary soda water. Not that that's all Pepsi is, but Costco, Walmart, Target, and XLP itself are going to have better follow through likely than the others. And Coke is going to be a little bit better than Pepsi. So I know that's not the question. The question is, how would we trade Pepsi, right? And I think the answer that sometimes comes before the setup is, why are we trading Pepsi? Has anyone asked themselves before they put on a trade, why am I trading that symbol? Because I like it? Because it's my favorite? Because everyone's talking about it? Because last week it had a really good trade for me? I think a lot of times we're not discerning enough about what we trade. So Pepsi is one of those examples where I wouldn't trade it unless I'm looking for something short. I wouldn't trade it. I think there are other better candidates in this group. And this relative performance idea of trade this, not that, this is what we teach. This is what I specialize in terms of sector secrets, right? What's the sector secret? What does that even mean, Rob? That means we understand the high concentration weighting of the way the indices and the sectors are made up of stocks. And then we say, well, what stocks tend to move together? And in that group, which stocks are the relative outperformers? All right. So that's that. Thank you for the question, Ajit. I do appreciate it. All right. Next up is HSY. Sure. Let me get back to my main layout. So HSY. HSY. All right. So we're always going to start with structure, which is largely neutral to bullish, but we're below, as you can see here, we're below the previous session close. And really for that reason alone, when I'm looking at Hershey, again, the question isn't, can I trade Hershey, right? The question is, why am I interested in Hershey and what time frame am I interested in Hershey, right? All right, Bo's asking about Wells. So let's do this. If I'm looking at Wells Fargo, let's open up the XLF. Excuse me. Let's open up the financials, right? Of all the stocks in the financials, including the financials themselves, Berkshire, JP Morgan, Visa, MasterCard, and American Express are where I want to be focusing on the long side. If you wanted to short something in financials, make it Morgan. Everything else, I'll pass on. Bo? I'll pass on. This is the sector secret that's clearly not a secret. All right, but I think for a lot of traders, this understanding of trade this, not that, as a touchstone, as a mindset to relative outperformance is relatively new, right? So then the next thing is SMH. Now, AMD is a great candidate, Bo. NVIDIA, TSM, which full disclosure, we're in a long position in, AVGO, ASML, Qualcomm, AMAT, LRCX. Make your choices in those stocks. Those are the outperformers. And may I even add, why choose? You know, when people say, sometimes my husband will say this or that, and I'll sometimes say, why not both? Why not all of it? And if I look at the SMH and I see those top 5 weighted names, as strong as they are, why not play the tide versus an individual boat? And that's the way I'll look at it. All right. Next up, how are we on time? Sorry, I gotta move the clock. Hang on. There we go. How are we on time? We're good. All right. So back to the main layout. Microsoft. Microsoft is one of those names that's very good. Actually, let's go to the XLK. Microsoft is one of those names within tech are very good. One of the things I mentioned in the webinar last night is of the magnificent 7, which 2 stocks are not so magnificent? Tesla, not magnificent, right? Apple, not magnificent. If you're looking for higher highs, if you're looking for follow through after a pullback, that's NVIDIA, that's Microsoft, right? So I would say yes to Microsoft, and here's why, right? And there are a handful of stocks in this group within the XLK that look amazing. And if you wanted to look at it through instead of the lens of XLK, if you wanted to look at it through the lens of the QQQ, there it is, right? Apple, Microsoft, Amazon, NVIDIA, Meta. There's 5 of your 7 of the magnificence as Google and Goog. What do I want to avoid? Right? Google and Goog don't look so good right now. Microsoft, Amazon, NVIDIA, Meta. Right? Don't short those. That's the easiest way. Sometimes the easiest way to trade is simply ask yourself, what am I not allowed to do? Not what can I do? Right? That opens up too many things. Limit your choices when it comes to what you can do. Have a natural part of the sequence. That's what we do in the mastery. Have a natural part of the sequence that starts to eliminate certain things from contention. I can't buy Tesla. I don't care if it has an up day. The path of least resistance has been more profitable to the downside since we dove below the 200 propulsion. The path of least resistance to Microsoft is up, as is Amazon, as is NVIDIA, as is Meta. So let's focus on that path of least resistance. Let's focus on the thing that it's likely to do for longer, right? Not short spans of, a downtrending stock is going to pop. How about a downtrending stock can be shorted on the pop? How about an uptrending stock can be bought on the dip? So we're looking for the paths of least resistance. That's the uptrend. And that's the part of the trade that's going to last longer, give you more follow through, right? And isn't that what we're all looking for? Okay, that's a wrap, gang. As always, thank you so much for being here for Charts and Coffee. Just a reminder, again, we only do this once a year. $7 trial. This is a no-brainer, right? If all you do is come in, check out our indicators, check out DPMR, HPMR, and how to position size and risk manage, it's worth 10 times that. And I don't mean that with any hyperbole. If you're finding that certain aspects of your trading just aren't performing the way you want them to, chances are one of the reasons is a lack of position sizing management, risk management, not seeing volatility levels, things like that. So come check out what we're doing. And I'm pretty darn sure something in there is going to be a needle mover for your trading. Be good to each other, gang. As always, I'll see you on Sunday, by the way. I'll see you on Sunday. And those of you that are taking the trial, we'll be starting up as soon as I log into the room. All right, gang, be good to each other.